Hello there, welcome to myfinanceteacher.org. Today let's have a look at cycle, sentiment and seasonality in grains, corn, soybeans and wheat. A buying opportunity is brewing in all those grains. So let's jump into the details. Starting with corn over here. Looking back to the pandemic lows and beyond, usually you can identify the cycles in corn with a few signals or parameters if you wish. And historically for corn we see that cycle rallies and drops down into the cycle lows are identified first by the crossing of the 50-day moving average, preferably staying under the 50-day moving average for over 5 days. Sometimes if the 50-day moving average is trending steeply, just a test of it might be enough. We saw that at the beginning of 2022 and in late 2020. With these rallies into the cycle tops and drops down into the cycle lows, we see RSI also changing quite a lot, every time by well over 20 points, which is accompanied by a slice through this neutral level of 50. Next we look at Bollinger Bands. And another signal for these cycle lows is a touch, often a multiple break below the widening Bollinger Bands. So historically, going back to the pandemic lows, corn cycles lasted for just under 4 months. And zooming in at the moment, the ongoing cycle has already been going on for 156 days. So this cycle is already quite a bit longer than usual, which means it's that much more likely that a cycle low is coming up soon. The longest cycle going back to the pandemic lows lasted for 190 days. Looking at the 14-day RSI, it's actually at the lowest levels going all the way back to the July last year, which was accompanied by this significant drop in corn by over 24%. Such drops don't happen very often, which again is just another sign that perhaps a bounce is overdue and might take place anytime soon. So that's 14-day RSI for you, very oversold going back to July last year. But looking at the distance from this 200-day moving average, the stretch below that distance is another sign of being oversold, meaning that a bounce is that much more likely. If we look at this stretch below the 200-day moving average, currently corn is even more oversold than it was back in the middle of last year. So yes, I've been drawing attention of the members at myfinanceteacher.org to the fact that grains are oversold, as you see a couple of days ago, and again back on the 17th of January. So for more regular updates on a range of assets, make sure to join us at myfinanceteacher.org. Next, let's have a look at soybeans. We use similar signals, parameters to identify soybean cycles, crossing the 50-day moving average, preferably staying below that for over 5 days for cycle lows, at least testing the 50 DMA if it's very steep. RSI changing by well over 20 points and RSI also crossing the neutral level at 50. Multiple pokes below the Bollinger Bands would also be another sign for the cycle lows. Historically, at least going back to the pandemic lows, the cycles lasted for an average of just under 4 months as well. Zooming in, again, the ongoing cycle is already 133 days long. It's a little bit longer than average, again, hinting that perhaps a cycle low is coming up soon. Technically, you see a falling wedge here, which usually is a bullish sign, meaning that historically, statistically, it's more often that the falling wedge breaks to the upside rather than to the downside. Moving on, looking at the 14-day RSI, it isn't extremely low. The last time we saw RSI lower than recently was only back in May and in March this year, accompanied by the drop of 15%. Soybeans, similar to corn, also dropped quite a lot in July down into that cycle low by around 16%. Within the ongoing cycle, soybeans have already dropped by around 16% from just under $29 to $24.4 right now. And another positive sign here is a positive divergence from this 14-day RSI, which means that we observe higher lows on RSI versus lower lows on price. Positive divergence is another sign that usually precedes at least some sort of a bounce. And moving on from RSI to this distance or the stretch below the 200-day moving average, soybeans are currently over 9% below the 200-day moving average, which is almost as extreme as it was back in June this year, when soybeans stretched around 10% below the 200-day moving average, and the current stretch of over 9% is well above the stretch we observed back in June last year. So again, historically speaking, soybeans are quite oversold at the moment. Next, let's have a look at wheat. Again, historically, we use similar signals, similar parameters, similar signs to identify these cycles. And history gives us cycles again lasting for just under 4 months on wheat. Zooming in, if we saw the cycle low over here on the 16th of February, which is possible, that would imply a cycle lasting for 81 days. That is quite likely, given that the previous cycle was extremely long at 180 days. Usually, extremely long cycles are followed by a couple of shorter cycles to bring that average duration back down to the typical level. But at the same time, you want to notice that 81 days is still quite a bit below the average of 4 months, so the cycle might continue down. Perhaps a safer entry would be if we see a positive divergence on RSI. That's a higher high on RSI versus a lower high on price. Let's have a look at more details of RSI, and it's recently been pretty oversold. Not as oversold as back in May and March this year, as well as July last year, but it might be enough for a cycle low. After all, even if in the shorter term the RSI isn't that deep into oversold territory, in the longer term, wheat has dropped nearly all the way back to its pandemic lows at around 4.8. Currently, wheat is at about 5.3. And if we look at the distance from the 200-day moving average, wheat was recently around 15% below the 200-day moving average. That is quite considerable. That's more overstretched than we saw back in July last year, but back in May this year, the stretch was larger, reaching all the way down to 20% below the 200-day moving average. Again, meaning that currently, while wheat is oversold, it has historically been even more so. So the current cycle might still continue for a short while, although starting to accumulate anywhere around these levels might not really be a bad idea. Remember, I'm not your qualified investment advisor. Next, let's look at market sentiment and seasonality, starting with the sentiment for corn. Beyond these cycles that last for around 4 months or so, we see longer term fluctuations. These are longer term cycles, if you want, where the sentiment fluctuates from hard times to good times back to hard times. During these hard times, cycle lows in corn are usually accompanied by this optics dropping all the way down well below the level of 30. Whereas during the good times, cycle lows in corn are often accompanied by this optics dropping just somewhere below the level of 50, or perhaps even almost reaching that level of 50. So again, if you see what's going on right now, market sentiment on corn is as bad as it ever was, going all the way back to the pandemic lows. That means that the proverbial blood is almost on the streets. And as you know, it's often not a bad idea to start accumulating when the proverbial blood is on the streets. Next, moving on to market sentiment on soybeans, the situation is somewhat similar. Again, the market sentiment is as low as it's ever been, going back to the pandemic lows. Moving on to seasonality, corn recently, back in 2022, experienced an unusually strong rally. So let's have a look at two versions of seasonality, with the year 2022 and without it, as you see, covering only 2013 up to 2021. In either case, there is usually a bit of a dip either in late February or sometime into mid-March, followed by a bit of a bounce into a new cycle and a very scary drop down into August. So my plan to accumulate is for a relatively short-term bounce, as I would like to avoid this seasonal weakness down into August and September. Next, let's have a look at seasonality for soybeans, which doesn't change much if you toggle these years on and off. So for seasonality going back to 2013, we do see a bit of a dip down into mid-March. Again, followed by a bit of a bounce into a new cycle and a very scary drop after that. Again, any sort of accumulation I have recently started is only a bit of a short-term play. Next, let's have a look at seasonality for wheat. Again, the seasonality picture changes somewhat if you toggle the 2022 on and off. So let's have a look at two versions of this seasonality. And again, we do observe a bit of a dip down into late February. But if you turn 2022 off, we see that the dip might actually continue all the way into mid-March as well. So on wheat, again, perhaps a positive divergence on RSI over the next 1 or 2 weeks might be yet another reassuring sign of an upcoming bounce soon. That's all on cycle sentiment and seasonality on seeds and grains. Let me know if you're interested in trading them or not, and if you're interested in precious metals instead, I'll try to make another video over the next few days. Have a terrific Thursday. Bye bye.